Hello, everyone. My name is Rachna, and I welcome you to the 111th edition of the series on business and banking dialogue organized by EPS. To set the context for today's discussion, here are a few numbers. The total credit outstanding in India was around 130 lakh crores in 2019 before the pandemic hit. NBFCs constituted around 18% of this pie at around 24 lakh crores. While the overall credit industry grew at an average 9% year on year over 5 years preceding 2019, NBFCs grew at 16% year on year, thereby steadily increasing their share in the overall credit pie. Advantages of NBFCs over banks lies in their reach, the access to the underserved and underbanked, and timely and personalized service offerings. Now, given the inherent advantage that NBFCs have over banks, coupled with the unprecedented challenging macroeconomic environment caused by the pandemic, should NBFCs now focus on specialization to further bolster their growth and eventually their share in the pie of the Indian credit industry? This would be the topic of discussion for today. To deliberate on this further, we have amongst us Srinivas Kantheti, co-founder and managing director of Wheels EMI. Wheels EMI is an RBI registered finance company that specializes in retail financing of pre-owned, new and electric two-wheelers. Since being founded 3 years ago in 2017, it has disbursed more than 400 crores to over 90,000 customers across 250 plus locations in metros, urban, semi-urban and rural India. Srini has an extensive experience of over 33 years, nearly half of which has been in the two-wheeler industry. Srini has headed the auto finance business of Bajaj Auto, successfully building portfolio of 2 and 3-wheeler loans. He was also the president of the motorcycle business of Bajaj Auto before starting his own consulting firm, which was iNext Consulting LLP, which was an advisor to promoters of auto and financial services businesses on strategy and process improvements, before obviously co-founding Wheels EMI. Srini is a keen reader and dabbles in photography. So welcome to the show, Srini.
Thanks, Rachna. Thanks a lot. And I'm very, very happy to be in this 111th session of business and banking dialogue. And while, being a very avid follower of cricket also, 111 is actually called as Nelson. So usually the batsman gets out, at 111. So I'm sure that, between you and me, we'll manage that, we don't have that kind of a situation. So
yeah, let me show you that's not likely.
Yeah. So thanks a lot for inviting me here, and I'm very happy to be here, basically.
Yeah, pleasure is ours. So let's just dive in. And I think the first question is a very obvious one. We are amidst a pandemic-induced crisis. What has been its implications on various types of NBFCs?
Okay, so I think this has become now almost a routine because it's not only NBFCs. I think we really went through quite a lot of stress, especially in the months of April and May, like any other business. And I think it's not the virus, it's the lockdown. And anyway, I firmly believe that the lockdown was necessary. So. But the businesses really suffered in the month, and it was almost like a zero business for all of us. And NBFCs are a very, very special category in this entire thing, because the issue with NBFC is that, or issue with any financial services company for that matter, is that there are two sides of the coin, right? The one side is the entire sales part, which got completely affected. Okay, in April, May, there were hardly any sale. And there's the other side of the coin, which is collection, and collection actually is, is nothing but, is the other side of sale actually. And that too got affected quite a lot. I think government moved very fast. Thanks for them to do that. They got them into moratorium situations, etc. and all that. The third issue, of course, for NBFC is that, whenever an NBFC sneezes, the banking industry catches a cold. Okay, so they become, very, very extra cautious in terms of lending, and the liability side, completely dries up when a situation like this happens. But luckily, what I would say is that I think this lasted only for 2 months, and from July onwards, we have seen an amazing V-shaped recovery, and especially I'm seeing this happening in companies or in NBFCs which are specialized NBFCs. It's still not happening in very generic NBFCs. Okay, NBFCs which are doing a little of this, little of that. I also do this, I also do that, kind of a thing. I mean, they are still, I think, struggling. But I can speak for ourselves from the two-wheeler industry. I think the recovery, I'm not very amazed about the recovery. I think the demand was always there. It was only a question that the people started coming back. So both in terms of sales and in terms of collection, there has been a very good recovery. And we are really looking forward to a very good festival. And I understand from my colleagues from other industries too, I mean, leasing industry, education loans, etc. I mean, very, very specialized, NBFCs are doing pretty well actually in terms of both the business side as well as the collection side, and the liability also has started flowing to them actually, basically. So, I mean, it actually, it actually strengthens my opinion, which has always been that, just like any other business, if you are in the NBFC business, you specialize. And it's very, very counterintuitive, because people feel that specialization means, having too much of risk on one asset class. It's and that's not true really. And these things are changing over a period of time now. So that's a long answer to your short question. I think things are really started looking up, especially for specific NBFCs which are in specific asset classes, basically.
Okay. So could you elaborate that for our audience a little bit more as to what specifically you mean by specialization and what all does it entail?
Sure. I mean, yeah.
And what is the level of specialization that is expected by an NBFC to be a strong contender to come out of this crisis and drive sustained growth?
Yeah. So I still, even 15 I was running Bajaj, not 15, almost about 10 years back, when I was the head of auto finance vertical of Bajaj, and that time we had actually almost a separate company which used to do two-wheeler and three-wheeler financing, nothing to do with the company which does, say, TVs, refrigerators, etc., and all that. Created absolutely a specialist team to do that. That bankers used to ask us that, are you not worried that your risk is concentrated, basically? Now, so I think I think the entire problem statement comes from a situation that we in India are. See, India is an economy wherein any business has huge numbers. Okay, you want to do any business, the numbers are very, very big. So we are very, very lucky that scale is always there whenever you want to do any business. Now, there are two ways of doing this, and this scale actually is both a curse as well as a blessing. First, let me talk about the curse part, and what typically happens is that, people start an NBFC and they say that, what, let me do a bit of, lend to some, SMEs, let me, do a bit of housing loans, let me do a bit of, two-wheeler loans, let me do a bit of tractors. And there are hundreds and hundreds of such NBFCs. Okay. And and if you really look at the statistics in India, I think India has more than about 11,000 NBFCs today. And my friend who runs a very, very specialist company called Auriga has actually in the last of this dialogue said that, out of that, hardly 1% have more than 500 crores AUM. And if you reduce the AUM further to 100 crores, it's only 3%. So we are actually talking about huge number of NBFCs without scale, doing, very businesses which are multiple businesses. And that is where the issue comes up, actually, in terms of, when we talk about specialization. Now, this is the kind of approach which may have worked in the past, okay, but it's definitely not going to work in the future. And everybody is also realizing that, you need to narrow your focus. You need to, build scale on a narrow focus. You can do both, basically. So that in one way. And just to add to this, to my experience, especially when we started Wheels EMI 3 years back, we were two-wheeler guys. We had done for 15 years. We have done two-wheelers and all kinds of stuff in two-wheeler industry. So in fact, my wife jokes that I know more about two-wheelers than I know about anything else. But the point was, even when we started a two-wheeler company, okay, we said that we'll start a two-wheeler company. Okay. We did not start a generic two-wheeler company. We said that we need to actually identify very, very specific niches where we should go and start the business, because there's no point in going and doing business in Bombay where there are 20 financials sitting in a dealership and paying 4% as a payout, and start doing those businesses. There are NBFCs which do it, and some of them are up for sale today, because you don't have any competitive advantage at all. And anyway, I'll talk about this a little later. But I think specialization doesn't mean only looking at a particular category, but also finding niches within that category, and doing business there, basically.
Right.
One last thing I would like to add to this is that this is a very, very common thing in any business in India. Okay, I mean, nobody expects Hindustan Lever to go and start making televisions and refrigerators. Okay, just like nobody expects BPL to or Videocon to make soap. But I don't know why in the banking industry people expect NBFCs to do everything. In finance a pin to maybe a building. Kind of a thing. I think, but anyway, that is changing now, and so that's that, and especially this kind of a crisis is going to push people to rethink and become more and more specialized in their approach, basically.
Good. So essentially, you are focusing on your focused service offering on a specialized sector or a asset class, which would result in the better know-how of the value chain and the product itself, which would then lead to a better credit assessment, hence risk mitigation and better returns on investment, assuming the fact that India is a larger market and scale is is automatically will be there for the NBFCs to grow.
Absolutely. Yeah.
So given that, given this context of your focus on building specialized NBFCs, tell us about its viability and applicability to NBFCs across sizes, because there could be small NBFCs which are sub 100 crores of portfolio, medium NBFCs which are 100 to 500 crores of portfolio, or even large. So what is the feasibility and its applicability, the specializations across all these sizes of NBFCs?
Yeah, so I mean, I have just a one-line answer to this, and I think that actually it is applicable to all sizes, really. All sizes. People start small and they end up big, basically. But I think it is absolutely applicable to all sizes, really. Okay. And even when you look at large NBFCs which do multiple businesses, I see that the ones which are very, very successful, example of Bajaj Finance as one of the example. If you go there are not one. It's not one company. There are almost 4 to 5 companies within one company, basically. Okay, and that's how the specialization is done. Each company is really, really different. The auto finance vertical has nothing to do with any other business which they do, other than having a common treasury function, basically. So that is specialization for me, basically.
Okay. So what in your view, if you could give us some examples of these specialized areas for credit institutions which have, say, growth potential in the immediate future?
Yeah, I mean, there are typical, answers to this. Like, there are. The government of India had recognized this long back and created a separate, structure called as HFCs, which do only housing finance, and that's very well known, But the point is that even housing finances have started becoming very, very generic in their approach. So if you look at, there are companies which have been very, very successful. HDFC, for example, stuck to their core and said, we are doing only that and we're doing nothing else. Whereas some other housing finance companies have actually not done that. Within housing finance, again, when you look at a company like Aadhar, for example, or Dhruv Finance, they have done extremely well in terms of specialization in very, very low cost, small ticket loans, basically for housing. Education, for example, is becoming very, very important now. I mean, we had only 2 education loan companies earlier. We had Avans and we had one more. But now you can see many more coming, and within education, people are actually specializing now. They have started specializing on what they are looking at. The other way of specialization is not only on asset class. You can also start specializing in the value chain. Saying that, are you really going to be a full-blown, balance sheet-led NBFC, that, I will do everything right from sourcing, up to, collection and borrowing and create a balance sheet, okay? Or you become a fintech kind of a player wherein you are actually, doing, specific tasks only, and you're not doing more than that. So even those kind of things, while they may not be all of them NBFCs, but they are part of the entire value chain of NBFCs. The third thing which I'm seeing in the way specialized companies are coming up are companies which are actually started saying that why should I just limit myself into just giving a loan? and why should I not become a part of the entire system of that asset class? And in fact, that's something we are doing in Wheels EMI today. For example, we finance second-hand vehicles, but we are also saying that why should we only start to finance second-hand vehicles? Why should we not also create demand and supply for the second-hand vehicles, kind of a thing? So I think so there are these kind of different entities which has come up. In fact, RBI has done a great thing. They have created something called as a sandbox, wherein you can actually create a create a specialist kind of an NBFC, and you are not you don't have to go and run around and take 20 clearances. You can actually go and operate in that sandbox. I don't know much details about it, but I think these are the kind of things which are getting encouraged today. So I think today is a good time to actually start looking at various various specializations basically.
Okay, all right. So then now, so what are the undercurrents that have emerged over these past few years and which have been activated more so by the pandemic that would influence the growth of a specialized NBFC?
Yeah,
so in some of the areas that you just mentioned.
Yeah. So here, let me tell you, maybe I'll tell you a very short, example or a story or whatever it is, and take it from there. So the year 2007, when I took over as the head for the auto finance vertical at Bajaj, we realized that we were losing a hell lot of money in the rural markets, basically. Okay, and that was because our collections was bad. And we were just not, basically. So the first call that I took was to shut down the rural business at that time, okay, temporarily. And then we started going into the depth of it and started realizing that is one of the best businesses to do, actually. We were doing actually the business in a very, very wrong way. We were trying to, tell customers who are actually beautiful, credit-worthy customers, but not banking-worthy customers, saying that I will loan a bank account. And in 15 years today, okay, we have specialized in creating this kind of a scenario wherein we go to customers who don't have bank accounts but who still deserve a loan and get a loan, and there are very, very unique methods of doing the collection. I'll not get into the details of that. So what really it says is that I see this huge shift which has happened in the last 10 years from urban to rural. Okay, and even today, when we are looking at the entire way the recovery is happening in the two-wheeler industry, and not only the two-wheeler, as I said, I have spoken to a lot of other industry people. They're all saying the same thing: is that the recovery rate is much better in the rural rather than the urban. So I think the future for Indian NBFC is rural. It is not urban. Okay, and especially when fintechs and all that are creating these kind of models, they should keep in mind that what is happening really in rural. Okay, so this is one big undercurrent that I have seen. The second big undercurrent I have seen is really who is the borrower. Okay, and while MFIs have done a great amount of work in terms of lending to women and women self-help groups, but individual loans are still being borrowed mainly by men. Okay, but I'm seeing that big change coming in. Okay, and especially in my industry, the two-wheeler industry today, is that when you start going to small towns, today the scooter or the two-wheeler has become a way of empowering women. Okay, today if women find it extremely convenient to drive a scooter, to attend classes, to go to colleges, to do a small business, to go to work. To start working in the hundreds of call centers which are coming up in smaller towns rather than bigger towns. So if you go to a place like Meerut today, you will see women driving scooters all over the place, and they are becoming more and more your customers. They are the people who are going to borrow. It is no longer that their father is going to borrow and give it to them, basically. So I see that big change also happening. And the third undercurrent I see happening is that from ownership to ridership. Okay, a lot of things are going to happen wherein people say that, why the hell I should own a product really, I mean, why can't I just lease it out? Why can't I just rent it out? Okay, so we are seeing those shifts also happening, and NBFCs will have to very quickly adopt their models to that change too. Okay, so to my mind, these are the three big undercurrents I've seen in the last few years, actually, basically.
Okay, I had a sub questions around these three undercurrents that you just mentioned, especially going rural. But wouldn't that entail higher operational expenses as well? In which case, how would the And also because the rural areas tend to be scattered. So how would those efficiencies come about? And they are not as densely populated and scattered as well. So how does that mechanism work? While there's a market there, reaching them in the particular price point, how does that work?
Absolutely. I think the opportunities are big and everybody knows about it, and the opportunities. And you're right, in terms of, reaching out to them, and the cost of reaching out may be much higher as compared to reaching out, say, to a urban audience.
Yeah.
Okay. We see that the cost of, cost of collection or cost of procurement is definitely higher in the rural area as compared to the cost of collection and cost of procurement in urban area. But there's a huge difference in the cost of bandits. Okay, today, for example, I am very, very comfortable doing business in Begusara in Bihar rather than doing business in Bangalore. Okay, because my bad debts and my NPAs are absolutely minimal. Okay, and this is something which is amazing. So the customer may delay your payment a bit. He may want a bit of flexibility. Okay, you may have situations wherein actually he pays half your EMI. He pays your EMI, in 2 installments in the same month, kind of a thing. But he ends up paying your money. Okay. And one of the big advantages of being in rural is that almost all the customers have own houses. Okay. And so there is a trackability and all that. So if you look at the overall, and I think at the end of the day, what you have to look is not only the cost in its isolation. You have to look at the overall, ROE that you make, on the product. And today our ROEs on the rural product is much, much higher than the ROE that one can make in urban product. But on the other hand, if you don't have expertise, you will burn your fingers very, very badly. Okay.
Yeah.
Okay. So it's not for everybody. It is for people who understand that. Okay. And I mean, this is like, one of our very good friends who actually does business on in the farm sector, where he finds it extremely profitable and also extremely low in terms of bad debts when he's doing the last mile chain for farmers. Okay, people consider farm sector as very, very dangerous business to do. Okay, so I think if once you know how to do it, then I think you have the capability of, I mean, you can then do it basically, and that's where specialization comes in. Now, if I'm going to confuse myself, saying that, look, I want to do, also I want to do cars in Bangalore, I want to do second-hand vehicles in Hyderabad, I want to do scooters in say, for example, Gorakhpur, then I will never reach that level of expertise and specialization, basically. People keep on asking me that your company's name is Wheels, when are you adding wheels to you? I said, never. We are never going to add wheels. We are a two-wheeler company, Maybe I made a mistake, I should have named the company as Two Wheels EMI, basically. Okay.
Fair enough. So before we proceed on with our discussions, I have an announcement to make. This is to all the audiences who've signed in. Please let us know of your questions so that we can take it up with Srini towards the end of the discussion. Thank you. All right. So moving on. Your firm is specialized in two-wheeler finance. Given this context, how will a DNA of a specialized NBFCs, as we say, the one that focuses on two-wheeler finance, be different from a diversified NBFCs such as Bajaj Finance, Hero FinCorp, Mahindra Finance, who also provide two-wheeler loans? And so also that, what are the differentiating factors that potentially gives specialized NBFCs a competitive advantage?
Yeah, absolutely. So I think, as I said before, it's not enough to specialize. You have to develop expertise, and you have to also have some kind of a niche where you can get it. Okay, the best businesses to be in businesses which are where you're first, because once you're first, usually you do not lose the leadership, basically. And so when we came out of Bajaj, when I keep on saying we, because it's a set of people who came out and set up this company, and my co-promoters along with me, and also quite a few of my people actually have come out of the two-wheeler industry. So it was for us, it was as if we knew everything. We said, I mean, there's nothing we have to learn. We know everything, So what do I have to do? I just have to pick up phones and talk to 100 dealers across India and say, hey, we have come to financing. So we will become one more financier in your counter, okay?
Yeah.
And we will start competing with the 4 or 5 of them sitting there. So I think that is where we said that, no, this is not the way you can build a company, basically. You have to have something which is very unique, very differentiated. And the first thing which we did was we started financing second-hand two-wheelers, which nobody in India did actually till then. Okay. And when I was talking to Rajiv Bajaj, my ex-boss, saying that, look, I'm going to do second-hand two-wheelers. So he asked me a question. He said, what will you do if Bajaj Finance also starts doing it? I said, you can never do it because, the entire structure is very, very different. When you're doing second-hand two-wheelers, what you're doing is that you are actually a multi-brand financier. That means, you are sitting in a place where the dealer is a very, very small dealer. Okay. He sells 40, 50 vehicles. Okay. He's very unstructured in his approach. And to this person who sells, all kinds of vehicles, you have to provide finance for all the vehicles. You can't say I will do only a Honda or I'll only do Bajaj, etc. and all that. And we realize that, if we have to do this, we have all the expertise of doing it, except that we do not know how to value the vehicle. I mean, when you're financing a new vehicle, now, I mean, this is a nuance, this is the biggest nuance, that when you're financing a new vehicle, you know the value because it is there. It's a price list which is there. But how do you know what is the value of a second-hand vehicle? How do you know the quality of that second-hand vehicle? And that's when the first set of people that we hired were actually not finance people. They were actually technical people who developed for us a complete algorithm. And today we have completely automated the way in which we value the vehicle, the way in which we actually do the vehicle. So this is the first differentiation we have created. We are now 3 years into this market. And I'm amazed that in 3 years, not a single person has still come into that business. Okay. And I'm very, very happy that they're not coming in because, they're also realizing that it's not an easy business to do. Similarly, I explained to you about the rural part of the business. Yeah. Okay. Yeah. You said that we are in 250 locations in India, correct? Yeah. So out of the 250 locations, if you leave 13 locations, everything else is rural. So we are there deep rural. Okay. And we have very unique cash collection models wherein we do not use banks at all. Okay. And it works beautifully, basically. Similarly, you must have heard now, and all of us know that big move electrification of the auto industry. Okay, cars and everything. Government is encouraging that you should get more and more electric vehicles out on the road basically today. And our bet is that the electrification is going to happen faster in two-wheelers than any other kind of cars, etc. Now already there are a lot of electric vehicle manufacturers today, and because I'm a specialist, okay, I have spent a lot of time and effort in understanding how do I finance this market. And this market is very, very different than the one that you're financing a normal IC engine. Because in a normal IC engine, there's something called as a resale value. If tomorrow, if you have a problem there, in electric vehicles, the resale values are not been established. There's an issue on the battery. You do not know how long the battery is going to last. So you are actually underwriting not only the person, you're underwriting the company. Okay, and there are what, about 9 or 10 two-wheeler companies in India, but there are about 80 electric two-wheeler companies in India. Okay. So you should know whom to finance and whom not to finance. So I think these are the things which large companies find it extremely difficult to do. Okay. Even for example, the lease models that we do, wherein we are ready to lease a product and say that I'll buy it back after 2 years. Now no bank can ever do this, because they can't take the risk of the product. Whereas we can do that because we understand the product very well. And then that becomes a holy cycle for us that we sell the same vehicle again, finance it once again. So the same vehicle, gets turned around 2 or 3 times, basically. So when you start doing only one thing, I think all 24/7, you focus only on that thing. And then you find various means of doing things, basically. Okay. So these are the kind of differentiations, I think, which differentiates us from. And I think our investors as well as our lenders have understood this very well. And that's why, we are able to raise money pretty well, both on the debt and the equity side for this kind of expertise that we have developed. Basically.
Good to learn that. So Srini, before we move ahead, shall we take an audio question for you?
Sure, absolutely.
Yeah, so we have our first question by Harish Prabhu. Please go ahead.
Hi, Srini. Hi, and hi, Rachna.
Hello.
Hi. Yeah, Srini, given the paradox that NBFCs actually meet the ever-growing credit needs of a growing India, right? I mean, they go where banks don't go. but there's a big Achilles heel, in their ability to borrow leverage, especially due to the lack of raising public deposits for non-deposit taking NBFCs, which is the larger set of NBFCs, right? What is your view on the potential for more friendly regulation, uh, enabling NBFCs to access less expensive, that is debt capital, especially post-pandemic? Because I think every business is going back to the drawing board for the future, right? So the regulators should also actually, in my opinion, look at ways and means whereby, help NBFCs to, raise some sort of capital apart from, in the nature of debt, right? When you're not being allowed to take a deposit taking. So what's your view on that? Will such a friendly regulation emerge?
Thanks a lot, Harish. Hi. So, okay, so here I have a slightly different opinion on this, and maybe it's not a very popular opinion, but I'll still state it. I don't think there's anything that the regulator needs to do, actually. I think they have done whatever it has to be done. I think the biggest issue is the mindset of lenders, actually. Okay, and by lenders, when I say, I talk about large banks. Okay, I talk about big banks. I talk about, the issue is that, by their very own structure, okay, the big banks are supposed to be basically wholesale lenders. There's no way in which you can force a big bank to go and do a lease of an electric vehicle in, say, somewhere like Rajahmundry, okay, and take the risk that after 2 years that vehicle will come back and you have to resell the vehicle and you have to refinance again. I'm just giving as an example of my business. I'm sure that there are a lot of these examples, basically. I think the earlier banks realized that, and many of them realized it, the better it is. The issue which is coming up is that they find it extremely difficult to lend money to asset classes which they don't understand. But my exact argument is that you better lend because you don't understand that asset class. That's the reason you don't do that business. You make it. I mean, Hindustan Liver does not go and distribute products across the value chain. They have distributors to do it. And NBFCs actually play the same role. We break bulk, basically. Okay. And I think it is that realization or mindset which is very, very important. The second is, of course, also that why only banks? Why? I mean, it's all kinds of institutes, whether it's mutual funds, which is banks, which is I mean, getting into the debt markets, getting into NCDs, etc., raising money, etc. I think this entire thing is not so much a problem with the regulator or with the government. It is more the issue with the lending institutes themselves. Okay, so you have very ridiculous situations wherein banks lend to a bigger NBFC, that bigger NBFC lends to a smaller NBFC, that smaller NBFC finally lends to a still further smaller NBFC. So everybody is doing lazy lending. At the end of the day, they end up making 2% on this. I know I will not be very popular by making this statement, but this is exactly what is happening today, basically. But I think things are changing. Things are changing very fast because at the end of the day, the banks can't sit on money. Okay, they need to give a return to the shareholders, so they'll have to lend, basically.
Yeah, one more adjunct question, if you don't mind. Do you think so that since your company or similar companies in retail finance, right, have a portfolio which underlying comprises of hundreds of thousands of customers, right? So will the securitization market, open up for NBFCs, or is it already there? Or because that could be an easy way out, right? Also,
absolutely.
You rate the portfolio, you get a rating, etc.
Absolutely, Harish. I agree with you, and that's happening. That's already started happening. For example, Wheels EMI is the only company which has actually securitized a second-hand two-wheeler portfolio to a bank. So while I have stated this kind of thing, there are banks which are very, very progressive on these matters, for example. Okay, and when we could prove to them that my second-hand portfolio behaves extremely well, kind of a thing, so we could securitize even a second-hand portfolio. So these securitizations, these kind of and even co-lending models, I mean, I think the Reserve Bank of India has made co-lending much easier now. For example, I think last month last week, they passed a resolution now saying that, you don't have to be a systematically important NBFC to do co-lending with the bank any longer. Okay, so co-lending is another way of doing business. Okay, so I think there are multiple models which are emerging, and but the only thing which I would say is that two things. One is that the bank should not forget that they are not going to be in the last mile connectivity business. And the NBFC should not forget that they can't be in huge infrastructure kind of businesses. I think both of these are wrong, actually, according to me. Basically.
Well, thank you very much. A brilliant perspective. Thanks.
Yeah.
Thanks, Harish.
Thanks, Harish.
Okay. So now moving on. So now that we are on the topic of NBFCs and specializations as a go-ahead for them to bolster their growth, how does the various fintech models that have emerged and are thriving in the market and its dynamics with the existing NBFCs fit in? And the fintech models that have emerged can be categorized into three, which is technology enablers across the lending life cycle, B, who do tech-based on lending, 3, who do marketplace-based lending. So what are your views on their competitive or enabling dynamics with the NBFCs and the setup?
Yeah, so I think it's like horses for the courses kind of answer for this, and one of the great things which has happened in India is the startup economy has really unleashed this entire fintech world for us, basically. And this is one of the best things which has happened, actually. And it has happened in the last, I think, 4 or 5 years, really. You have a choice today, for example, which I said earlier also, is that you don't have to be, as an entrepreneur, and this actually answers Harish's question also to a certain extent, that as an entrepreneur, you don't want to get into, for example, the trouble of building the entire balance sheet. Okay, so then you can actually take pieces of the entire value chain and become experts in that, okay, and be able to offer that at a very, very competitive price, wherein then the big guys, who are actually building balance sheets, don't bother to do it any longer and just depend on you, whether it is, in terms of sourcing, whether it is in terms of credit underwriting, whether it is in terms of, the entire KYC, what you call onboarding, etc.
Identity.
Yeah, identity. So I think that's a very good thing which has happened. Hardly anything has happened on the collection front, okay, basically, because I have seen a lot of fintechs struggle on collections completely, basically, and the best give some analytics and the kind of a thing, games which have been created by the government and all that are exceedingly working very well. But at the end of the day, in India, cash is still a king. So I'll tell you the example. When in April and May, when our guys were out, they couldn't go out in the rural areas because of the lockdown, we pushed a lot of online payments, UPIs, basically. So our UPI percentage went up like this, basically. Come June, it has dropped down like this back again. So we keep on, calling those customers and saying that, why do you still want to come to the dealership and pay cash? Why can't you just do an UPI? Sir, I don't trust it. I will come to the dealership. Now, so there is a challenge there, basically, for them. Maybe somebody will solve that part of the puzzle also. Coming back to, as I said, horses for the courses. I will again give an example of Bajaj. I'm sorry, I'm quoting that so often because I worked there for a long time. I think, according to me, the best fintech company in India is Bajaj Finance, and there is no doubt about it. They can give you walk into a store today, they can give you a television loan in 2 minutes time. Basically, okay, and once you take the television loan, you are hooked to them for lifetime, okay, because you can get all kinds of loans without going through any paperwork at all and all that, basically, and that's one of the reasons why they have done so extremely well. Now, within the same company, there's another set of people who are doing scooter loans, or sorry, the two-wheeler loans as well as three-wheeler loans. Okay, this is completely feet on street model. Okay, there is technology there also. Of course, there's a back-end technology. Okay, I mean, you're sourcing and you have an app to source and all that, but it has hundreds of people actually out there in the field, sourcing for you. It has hundreds of people there out going and collecting. Okay, so what you define as one of the best fintech company also has another set of it, which is actually quite a bit of a traditional, feet on street kind of a model. So I think the biggest thing, and a lot of investors have also started realizing this entire, I'm only fintech and I will not do anything else is not going to work. Actually, there has to be a hybrid model. It depends on whom you're lending with. If your lending is to people who borrow early salary kind of loans, payday loans, then maybe you can be completely digital. But if you want to go and finance a tractor, Okay, ask Mahindra Finance, they can't go completely digital, basically.
Hmm.
So I think this is it. But just to give you one more example, as I said, in technology, for example, second-hand vehicles, as I said, it's completely technology driven today in the way we do the valuation. So earlier we used to have people who would go and check the vehicle. Obviously, if you keep on checking the vehicle, your costs are going to go up.
Yeah.
So today we take a video and an audio of the vehicle, and we have an algorithm which looks at the video and the audio, okay, and predicts that this vehicle needs these 4 parts as replacements, and hence it is going to cost this much as a replacement, and hence this is going to be the basically the entire cost of the vehicle, and this is how I'm going to finance, and this is what I'm going to do. So I mean, so you use so again you have Freedom Street, but you use the same small part to drive your technology to reduce your cost and also to increase your reliability, basically. So I think so. This I hope I answered your question. So it's like a hybrid models which will succeed in the future, basically.
Good. All right. So moving on. So what would be your advice to NBFCs who don't choose to focus on specialization, or who've not yet achieved the specialization in the asset class and the know-how and the way to assess credit, as we were just discussing in the previous questions?
Yeah, so my mind goes back again, that 11,000 NBFCs in India, and only 3% are more than 100 crores. 100 crores in NBFC is nothing, I mean, what? I mean, even if you make a 2% or a 3% ROTA, what you end up making, what, 3 crores, 4 crores? I mean, that business is not being worth being in that kind of a business. So I think the issue which comes up really is that, how do you change? I mean, do you really want to change? And I'm not giving a gospel truth sitting somewhere. It's only coming from my experience, basically. Saying is that I think the specialization first requires a mindset of sacrifice, actually. Okay, if you do not, if you are attracted to everything which is going around in the world, basically, okay, and I say I'll do a little of this, a little of that, and all that, you can never build expertise. You're going to we have seen that underwriting a two-wheeler is so different than underwriting a three-wheeler. Okay, it's completely different, actually. So just because I know how to underwrite a two-wheeler doesn't mean that I automatically know how to underwrite a three-wheeler. But I always keep on hearing people saying that, sir, thoda bahut kar lenge, chota sa business hai, we can do a little. Okay, so there's enough. I think first this mindset needs to change if you have to grow, because once you specialize, then you can afford to develop expertise in a very focused area. And when you're developing expertise in a focused area, then you're able to hire people only in that focused area, basically. Okay, you cannot build these organizations on your own. Okay, right from day one, you have to build for scale, because if you're not, if you want to be in NBFC, if there's no scale, you don't get money, basically. Okay, so if you want to build scale, you can't do it on your own. You have to hire talent. You have to put in the IT systems. You have to put in technology. So for all that, the moment you start focusing, it becomes more and more easier. For me, it is like, and I'm not saying that you don't do anything else at all, I mean, you can still spread yourself a bit, For example, we started doing second-hand two-wheelers. Then we said we'll do new two-wheelers in the villages. Then we said we'll do electric two-wheelers. But we are still within that. I mean, I keep on giving an analogy of yoga, actually. That when you do yoga, okay, you are supposed to actually do an asana wherein you are supposed to be first rigid in that asana. I mean, you have to have a balance. You take a position and you get balance. And once you are completely balanced, then you start stretching yourself. Okay. If you start stretching without having a balance, you'll fall on your feet, basically. So for me, I think people are in a hurry. They want to do 2 things or 3 things or 5 things together. And that's where, these things have a problem. And as they say, a good crisis is something wherein it differentiates between boats which actually rise during the tide, during high tide. During high tide, all the boats rise. It's only when the tide goes away, you know which boat is going to float and which is not going to, actually, basically. So I think this is a very good opportunity for a lot of NBS to rethink their strategy. There is scale in anything that you select in India. There is scale.
Yeah.
Okay. So I'm really an evangelist towards this, saying that focus. Don't lose focus, basically.
Good. So then we come to our last question, and after which we'll take some questions from the audience. So what are those 3 things, or say 4 things, that you wish you could change for driving the accelerated growth in the specialized finance?
Okay, so again, I'll come back to I'll come back to only 3. I don't think there are 4 things. I think there are only 3 things according to me.
Okay.
And all the 3, actually, there's only one thing. Okay, and I think it's the mindset, actually. Okay, but then I will divide it into 3 parts. Okay, I'll say first, the mindset of the entrepreneur, and I described that a little earlier also in the earlier question. Also, is saying that at the end of the day, the entrepreneur has to make a choice that, do I want to go wider or do I want to go deeper? Okay. When you say I want to go wider, that means I want to do 20 products. Okay. And hope that, something will click. Okay. And agar risk ho gaya, to kuch ek band ho gaya, to dusra chal jayega, basically. So sorry to use that Hindi colloquial, but that's how exactly the thing happens. When you go deeper, you actually select a product or a product category, and then you do not look at anything else, and you start becoming an expert and specialized in that. Okay. And I would say that the mindset of the entrepreneur should be to go deeper and not wider. Okay. At least first it should go to deeper. If you want to go wider, okay, then maybe start another company later on, but first at least, go deeper. And the reason for going deeper also, we spoke about all the reasons. We said that you will become good at credit underwriting, you will become good at collections. Even during a crisis, you will survive because you know how to do it. But there's also one more reason. Today a cardiologist makes a hell lot of money than a general practitioner. Okay, and that's because he is specialized. Okay, okay, and I think people who go deeper end up making much more money than people who go wider. So this is the first thing I think should change, the mindset of the entrepreneur. Okay. The second I would say is the mindset of the investor. Okay, and that has changed a lot. I mean, what was there 4 years back? People no longer ask me that question that why you're doing only one product, basically. Okay, and but 4 years back, there were a lot of investors who were only one thing, and nobody has scaled product till now. I mean, there are the questions they keep on asking me. Nobody has scaled it. I said that's exactly the reason why you should invest in me, because if nobody has done it, then that means it's unique, right? Yeah. So I think, but that has changed. That has changed a lot today. I think investors do not invest easily in generic companies any longer now. Okay. Yeah. Or maybe even 3 years back they had invested, but today I don't think they will invest in a generic company, basically. And the third, of course, is the mindset of the lender. Okay, and where again the same risk issue comes up, saying that what happens if the entire two-wheeler industry collapses? What will you do? Okay, I mean, we have seen a lot of collapses. We have seen a lot of what you call fears which have never happened. We have seen the entire demonetization time, how the entire MFI industry, okay, for 2 months they struggled, and how they completely came back again on the 3rd month onwards. Yeah. And they came back because they were specialized in that MFI kind of a field. If banks were doing that, they would never have come back, actually. Okay, so your chances that during a crisis a specialist will come back faster is much higher. So I think the lenders should ask this question: that why are you actually not specializing? Why are you diversifying, basically? So these are the 3 things which I feel, and I'm not saying that's not happening. It is changing. Entrepreneurs are changing. What do you call investors are changing, and lenders are also definitely changing, basically. They are definitely, they are giving a lot of we are seeing now, for example, today in a situation wherein we are growing very well. We struggled with liability last year. Today we are actually flush with money. We are really getting money at much cheaper rates than what we were getting maybe about a year back, basically. Okay, so which means that today the lenders are giving a lot of value to what a specialist has achieved. And when I speak to my friend in education loan company, he's telling me the same thing is happening to him also, basically. He's saying that I'm sitting on a lot of money today. I'm sitting on money which is much cheaper. And today people are understanding. Earlier they're saying only education loan, you're not doing anything else, basically. Okay, so I think it is changing. The mindset is changing. Maybe I would like them to change it much faster. That's all.
Okay. Yeah, that's quite insightful, and good to know all of it from you, and you being a proponent for specialized finance for accelerated growth of NBFCs. Hope the audiences liked it as much. So we have a question for you again from Harish Prabhu. Is UPI finally the holy grail for enabling collections in a much more efficient manner, and hence reduce the process inadequacies and cost of collections? If not, would you suggest any other product like a better version of UPI?
No, Arish, I think UPI is great, and what UPI has achieved is fantastic, and I mean, for example, wallets have just disappeared now, for example, they're completely gone. Okay. So I think great work done by the government organization, great work done by Mr. Hota and all his team, is that today at a very, very small amount of money, I'm able to get the digital payment done. The issue more is going to be the issue is more going to be that what kind of phones are available in the rural areas, okay, and also the horrible thing which is called as the network connectivity. I think we are going from bad to worse. Okay, I think today 4 years, and I'm very, very surprised that this conference is happening without an interruption, basically. Okay, my usual experience is that, and I think I mince no words in saying is that if UPI has to really succeed, I mean, we have to get much faster internet speeds across India. Okay, and it's not enough, for it to be in Bangalore or Hyderabad or whatever it is. I mean, if it has to be 40 kilometers or 50 kilometers away from Gorakhpur, my guy can't even collect money today, or using a mobile app. So we have special apps which work offline, basically. Okay. So I think that's the answer to the question. The second is more psychological, and I do not see that change happening very fast, because I have seen people paying money using UPI to buy, say, for example, vegetables or something like that in front of each other. But the moment when it comes to paying an EMI, they are very, very scared and very skeptical about paying EMIs using UPI, basically, because they are not seeing the guy, they are not seeing the person, basically. So I have always seen that, especially in the villages, there's a lot of trust that when he goes back from and he's cash, he has a lot of comfort saying that I have actually physically gone and delivered that cash, basically. That's more psychological. That will take a long time to change. It's not going to happen overnight, and that's one of the reasons why even after Demon, we are back to the same kind of cash flows. Okay?
Yes. Yeah. That's interesting. We have an audio question for you, Srini, and this is from Tyagarajan. Tyag, please go ahead.
Yeah. Hi, Rachna, and hi, Srini. Quite in-depth knowledge and kind of experience. I'm seeing more focus, specialization, mindset, lazy lending. India has scaled enormous wealth of information. Thanks, Srini. My question is simple. What is your lesson post-pandemic? Especially, what is that paradigm shift you noticed? What was impossible maybe 8 months back is now possible, and what does that take? Gives you more kind of, I can say, the impact. What is that lessons post-pandemic?
Yeah, so thanks a lot, Mr. Tyagarajan, and it is, I may disappoint you a bit about that lesson, because what I have realized post-pandemic is that I should become more focused than what I was actually, basically. So, so for example, 50% of my business today comes from rural areas. So I have given a mandate to my team that within a year, that should be 80%, basically. Okay, so so we are doubling down on on what we feel is the right model, and doing that. And the pandemic has taught us this, that there's no point in riding two boats together. If your strategy is right, just double down on it and just push it and get it done. So this is one. The second lesson that I've learned from the pandemic is that while government had given a lot of moratoriums, etc., and all that, especially especially we are in the space of impact funding. We do not fund huge Harley Davidsons or big Royal Enfields and all that. The customers who buy, whom we fund, our average ticket size is 45,000 rupees. Okay, so I have found that these customers are very, very honest. Okay, they come back and pay actually, basically. Okay, and that has, that has warmed our, hearts to no end, basically, saying that in spite of all the troubles that they have, of course, the vehicle is for them very, very important. It is a part of their livelihood. If they don't have a vehicle today in a village, a farmer cannot go and even do his own seeding. He can't do harvest. People do not understand this. People think that farmers live in farms. They don't. They live about 15 kilometers, 20 kilometers away from their farms. And they have to go up and down 4 times, and they can't take a tractor for that, basically. So if you don't have a two-wheeler, it is like you don't have legs, basically. So I think this is what, the learning has been, is that, stay very, very focused. And the poorer your customer, the easier it will be to collect money from him, basically.
Thank you so much, Srini. I'm very moved when you say honest customers, these small-time, people who are self-employed. And it goes without saying, it helps the people quite a lot when the farmer folds and the e-commerce is really picking up. I think the market is huge and there is enormous scale. Thank you so much, Srini.
Thanks a lot, Raghu.
Thanks, Tyag. So we have 3 more minutes to be precise. Would be happy if, please feel free to post your questions. Srini would be happy to take them. Yes, everybody agrees with, your side of proposing specialized finance to be the way to go for NBFCs. Yeah.
So somebody is connecting by audio.
Yep. Okay. Well, I guess we don't have any more questions for you, Srini, from the audience. Thank you so much for joining us today and sharing your views on the specialized focus for NBFCs as the way to go, and rightfully so. You did touch upon a lot of, while I am just, giving the closing remarks, Harish has another question for you.
Oh my God, Harish.
Harish,
you call me on a one-on-one call, then we'll have all the questions. No, it's okay. Sorry, I'll be happy to answer, Harish.
Harish, please go ahead.
Yeah, so Srini, this is more of a, what do you call, evolution question. So, NBFCs obviously, meet specialized financing needs where it is now that is the essence of banking, right? Or ideally, where credit is required, there should be credit available, assuming that the borrower is credit worthy. So, is there so logically, do you see NBFCs morph into banks more, or banks morph into NBFCs more going ahead? Because at the end of the day, India, whatever the 5 trillion economy and all, credit needs is going to be huge, and that's going to be driven more. The demand is going to be driven more on what you call in rural India, and also more of retail financing. And retail financing in India has not been, like what it's been globally, right?
Sure.
So, do you think so that an NBFC morphing into a bank, right, does it really help it, or does it mar it?
So, Harish, it is actually, the entire 1 hour discussion says that, according to me, NBFC should never morph into a bank. Because the moment you morph into a bank, you lose specialization. As a bank, you are supposed to do everything, right? You should. So then you have decided that you are giving up the specialization business, and you are going to become now into the business of providing of capital to the specialists who are going out and doing business. So it is like saying that as a break bulk or as a distributor. I want to actually become the manufacturer, basically. So it is as simple as that. To me, so it's people's choice, and banking, so it's people can make that choice, but the moment you morph into a bank, then you lose your specialization. That's very, very clear, basically.
Sure. The reason why my question was that, even now till today, in date, right, both in terms of customers, depositors, etc., whosoever it is, right, a bank has technically got more credibility, so to speak, right, and visibility, right?
Absolutely.
So from that perspective, and this whole thing about when ILFS started, and NBFCs typically receive a sort of a left-handed kind of a treatment, right? So that's what my question was.
No, Harish,
NBFC should actually, NBFC
Harish,
should deserve more, much more.
No, Harish, I understand your question, and I'm also going to make one more controversial statement. I don't think NBFC should be in the business of actually collecting deposits at all. I think it's not their job. Okay, and so it is the banks which should do that work. There are two different functions. It's as simple. Maybe I'm able to make these statements because I've also worked in non-financial side of the of business. It is very simple in my mind. Banks are trustworthy. People should put their money in the banks. Why should they put money in NBFCs? Okay, and there has to be a proper channel wherein the NBFC will use that money, basically. Okay. So anyway, I think we are running out of time, but so this debate can go on for some time. But
no, thank you very much. You've educated me a lot. So
shit. Sorry, Harish. So that's my take. I would say that one should stick to their competence. You want to change your competence, then you have to be also ready to pay the price for it, basically.
All right. So with this, we come to the end of the show. Thank you so much, Srini, for being there with us through this entire hour and answering our questions patiently. And so would be the audience's questions. Thank you so much, and hope things turn out the way it's best for the various participants in the NBFC industry. Thank you to all the audience for being with us and listening in. We do have an announcement. The next session of EPS's business banking and dialogue would be on this coming Friday, which is October 23rd. And this topic would be humanizing digital transformation in banking. And it would be led by Ms. Shalini Warrior, ED COO and Head Retail Federal Bank.
Great.
And that would be all from our end. Thank you for joining in.
Thanks a lot, Rachna. Thanks. Thank you.
Thank you to the EPS team.
Thank you. Thanks a lot. Thanks.
Thank you.